Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you. Fed hike just in. Bitcoin 0.75 rate hike in from the Fed. Let's take a look at Bitcoin. We called a huge, massive pump for Bitcoin to the upside. Let's talk about what we see here in the charts. If you were with me this morning, I wasn't even looking. I said, show me the charts and I'll show you the news. Didn't we? Didn't we all? Right? And let's get into it. Let's see what happened. Shout out to everybody here on the live. Let's see what happens here for Bitcoin with a massive green candle pump, but a pullback though from the downside there. Very, very interesting. I pulled the flag. Look, my bigger measured move was out of the handle to 22,000. Let's take a look at the absolute insane price action that's going down for Bitcoin right now. Let's cover it as we get in. We're also going to watch the Fed live. We're going to talk about Jerome Powell and what's going down with the Fed. So we're here to bring you live coverage of the Fed coming to you soon. All right. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. All right. And we're getting ready. We're all waiting here, presently surprised. All right. And they started the stream, but they haven't, we're not full blown yet. All right. We'll bring that to you live with live commentary behind Jerome Powell, what he's talking about. Let's take a look at what happened to BTC. So if you're on my live stream earlier today, all right, we talked about the fact that this flag was highly likely to break to the upside. It was this little old flag right here, all right? And we did. We got the push. We got a blast from the past. However, we got blasted all the way back down. We retested right at the 0.75, or a little before that. Started to make another flag, stayed back inside this flag, and then would make a massive pump all the way to the neck. Look, I had 2 resistance points. Look at, I made 1, 2. We went basically in why? Because this was our previous high, and I didn't think that was going to happen right away. Sorry, I moved that. I didn't think that was going to happen right away, to be honest. But if we look at it here, we boomed all the way where? 22,258. Quite interesting if you think about it. Quite interesting, right? We hear, seems like 5 minutes ago, we left the live. Well, we did. We did. 0.75 basis points just in. Bitcoin to 38K, like the lifer said yesterday. I don't know. I didn't say that. I just may have made I don't say, I say I don't know anything about where Bitcoin's going. I say I know nothing but the fact of my own ignorance, so I can't be quoted on that, When 100K, 250K, you people are funny. Shout out to everybody here on the live. Thank you for jumping on in. Shout out to Legendary Sniper. It's a fishy pump for sure. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here. Send this out to the Twitter with the Fed live coverage meeting here. I want to see what they have to say. It's the same nonsense. What would a cow do in your kitchen? Interesting. Small cow looking for grass to lie. Large cow turned into circles, flee for direction. Paper cow hold up a tiny sun. Magnetic cow wander across the field of a fridge door for fresh grass. Talking cow, listen. Interesting. People are funny, and they'll give you any answer you want. Pretty interesting. We're going to copy this, send this into the trading group as well. I don't think anyone even realizes that I'm live. My own trading group's like, wait, Lifer's live? We also have the monthly candle close coming. That's another extra live stream that we're going to be doing. So jump on in. Don't be afraid. Don't be scared. Don't be scared. Look, we called this pump for Bitcoin right here. If you're on my live stream, I was talking about Bitcoin pumping down here at 21,400. Bam, bam, bam. Thank you, ma'am. This was my projection right here. I was just beginning to project the next flag. I said, now you make the next flag. We broke out of it. We broke back into it. And we also stayed above the zone. I'll also show you here, if we're watching the 400, the 4 hour, And here's the deal. The 200-day moving average, we got the push away from it. And I keep saying that this is the key. Everyone else can tell you whatever they want. I'm telling you, as long as we stay above the 200 right here, which is the 200-day on the daily. It's on the 4-hour, though. But as long as we stay above this yellow average, we are good to go. And we could continue up to the upside and create a bull run, you know? I'm not saying we are creating a bull run. And right now, look, we're double topping here. Do you see the double top? Right here. Right here, right? And so that's a double top. A bit of an M, it's hard to see. That would be the measured move, all right? So just something to you know, and you'd be hitting these other areas. So I'm just showing you the possible bearish idea, all right? However, this is a beautiful breakout. How did I get this measured move? How did I know we were going to go at least to this point? You know, as you can see, my line brought us to 22K. Well, it's simple. Rising wedges break to the upside if they break up parabolically, and you can just take the length of the back end of the wedge. You flip that to the top, and that's where you're supposed to go. And what a massive move, because there was a lot of fear in the market. People were waiting. People were wondering what was happening. So a lot of people tried to take advantage of the market. They're like, I'm going to short, I'm going to long. And I tell everyone, you know what? Just take it easy. Take it easy. Don't do anything, you know? Let the professor's in the house over here, you know? Shout out to everybody here on the live. Thank you for jumping on in. If you're new, I appreciate it. We're going to go through this Fed meeting together. It's not going to be fun, but it's going to be interesting. And we're going to be prepared for what's happening for the rest of the week. This is going to be fun. This is going to be awesome, as I say. Shout out to the 308 people on the live and building, 313, and we're flying up. You called it from the exact bottom yesterday. Big respect. Shout out to Will Islam. I did, actually. I called this exact bottom yesterday in the live stream. 7-minute chart, watching the bullish divergence right here. I called this bottom on the live. I actually went into the live. I made a live trade. Bitcoin 3L to the upside here, right there. Called the bottom based off divergence. There was bullish divergence here, and you're at the bottom of the channel. So there was also a bigger bullish divergence here. Swing down and swing down. And this rang through all the way to the 1 hour throughout the 15-minute. But that's the bigger one there, see? And I'm a divergence trader, and when you see the divergence, like, called it perfectly, it looked just like this one too. The prior one right here. Boom. And it looked a lot like this one here. See the upward momentum. And so, lo and behold, I trusted in my intuition as a trader. I trusted in what I knew to be true, which is divergence. And we banged on them to the upside. You can watch, I advise you go and watch yesterday's live stream if you're new. It will be a clinic for you. Just watch the beginning of Bitcoin stuff and watch what I'm talking about. And see how because you see me trying to figure out what's happening. I'm like, I don't know. And we come to figure it out live together. Watching that live is priceless. You won't really get a trader trying to get through their mind out like in front of everyone. That's priceless, because that's what I always wanted. You know, people used to trade. I'm like, but show me how you did it. Show me what you're doing. Show me when you pulled the trigger. Stop BSing me. Show me when you actually entered a trade. I want to know if what you teach is real. Are you real? Show me that you're real, you know? And I always had that feeling like, come on now. So I like to provide the back end and the front end, if you know what I mean. The in and the in, you know? So like, and honestly, like, this trade's still rocking from this entry here, you know? Stop losses put below support and resistance each time you get above a bigger zone. Like when we got to here, stop loss gets brought to here for me. I don't know what you do, but for me. Then when we get to here, stop loss gets brought right under this line, right? And look, still it would have been safe. Now we're up here. Stop loss can be brought under this line here. See this line? 21,004, and you're still in huge profit. So if you come down on it, fine. It's about not being greedy and just continuing to raise the stop throughout the trade. That's how I play it, you know? So look, this thing is making a flag now. So again, same thing that I always do. And what we can do now is that was a massive move above the flag, in my humble opinion, on our way back to 22K. We did all this. We did the work. We did the math. Now what I'm going to do is I'm going to delete everything, and I'm going to start fresh again. Because we got where we needed to go. We figured out what we needed to figure out. All right. So we're going to flip on over to the 1 hour time frame. And we're going to break it down. So we got exactly what we thought, 0.75. And show me the charts. And the chart said that we were going to get a little bit of a push on the 7. But it was the 7 minute. It took me years to figure out how to use these different time frames in tandem and to play them off of each other. You can even say, look, that we broke out of the pattern, but we did bullish divergence and broke back in almost. Like, it's kind of very interesting. Once you put it out, you have to take away this hit, which is weird. Here you get like this hit and then you get the whole shebang, you know. I go to where it makes the most sense. And honestly, did we come back down and retest? We did right there. See that? Look at this. So we bearishly retested. So they try to get the bears. So they did break you out of the pattern. Look at this is exactly what they did. So people were on this trajectory. They broke you out of the pattern. They saw a bunch of traders load up here. So they brought us right back down to try to get as many as they could. The divergence had already told you too many people had been liquidated. That's what divergence is. It's liquidations. Okay? I'm trying to put this together for you. So it took me a few years to figure out. And then I show you the idea of how to play a rising wedge, but rising wedges break up parabolically. All right? Show you the measured move is the base of the back end. And like, boom. I mean, you got a measured move to 22,170. And you're sitting at 22,000, you know. So it behooves me. But again, we nailed this. If you were in my trading group, I led you not astray ever since this moment right now. We just went up and up each time, level by level. And how I did it was by chopping it up into small time frames and using support and resistance and divergence. You know, it seems so simple, right? But it was done accordingly. And now here we stand back at 22,000. And honestly, I'm not even that happy. It's not that great. We're at a resistance now, and we're at a possible double top, as I showed you before. You know. All right. But, you know, and if you don't understand the rising wedge video, then go type in how rising wedges cryptolifer. All right. And watch this video right here. And I'm going to explain how to train the rising wedge pattern because it can bury you, but it can pub you. And it's very interesting how to use it. So you want to check it out. Look, when rising wedge breaks up, see what he's saying? Yikes, height rate, Jerome Powell. He's on the Fed meeting too. Can we get 16K watching? Because we're going to have fun. I like Kevin, though. Kevin's a good dude. I want to get up to 16,000. That would be awesome, right? We can get there if we keep going and we don't stop. Shout out to each and every one of you for being here. Hit the likes, everybody. We got to get them likes up. Hit the likes up. We called Bitcoin live this morning. You got to give us some credit. You got to love on us. All right? You got to give us credit. Like, we stayed true to what we said. We held face. I drew a thing, said, hey, it's this thing's going over to this thing. What, do I have to be Tom Crown over here? Shout out to Tom Crown. Hey, Tommy, I love you over here. How you been, kid? Let me send a limo for you. Come on over here. Let's have a discussion. Me and Tommy over here. Nah, but just, you know. Hey. What's your take on the next meet coming up? Oh, come on. Don't do that. Let's get out of there. Like the meeting just happened. Don't do that. September. We'll see what happens in September. We got a long time to go. We got a month and a half till September. So this is nice that we had this breather, you know. The reason why, because the next meeting is long. And everyone said, well, if the next meeting is long, they're definitely going to hit us with a hard one. And when they didn't, that I think was really the reason why we're getting a bit of a move here. Because we avoided the hard one. You see, and that gave people that move. They're like, all right. A new moon tomorrow does also give a bit of a dump for Bitcoin. If you look at the moon phases, we'll go over that. If you stay tuned for more, we get up to 400 likes, let's say. If we get the likes and the watchers, 350, we'll go over the moon phases for you and break it down. It will be amazing. But look how support and resistance and the high volume nodes just add up. So as long as you play your S and R, you're going to be pretty spot on no matter what. All right? At the end of the day, low, high, lower, low, lower, high, lower, low, lower, high, right? Lower, low, lower, high, lower, low. And we still have a lower high. Like nothing has changed in this trend. So unless Bitcoin can do the loop-de-scoop-doop, like come on. So what we're looking for here now is to bounce off the support line. Like this would be a great place to play along. See what I'm saying? You got a big High volume node sticking out. Basically the POC, a little, it's almost the POC, but it's shy by a little bit. Still pretty substantial and strong, you see? You see what I'm saying over here? It's right there above me. Look at the POC over there. Look at it trying to raise this. I can't raise that POC. It's too strong. I see a bullfig channel, not a wedge. Hey, man, you see what you see. I see what I see. Monkey see, monkey do. Be careful out there, everyone. Please don't use leverage. Shout out to Pump. We don't push leverage here. Thank you so much for saying that. I love you, Pump. I appreciate you, brother. So I have this for the most of the part, but it's interesting how when you keep this, the only thing that's very interesting about this is when you kept that trajectory, like I just showed you, and there's diagonal Fibonacci's that are always running through the grid that get respected by price action. But this is what's interesting. This rejection and this bounce, and you can see how clearly this line had something going on right there because it was respected and then respected. And it actually was the catalyst for the move to the upside. So had you been reading it properly, that kind of was it, right? So that's why lately I've been drawing more than one pattern in a pattern. And it may be confusing to some, but it is what it is, So this is what he means by I see a bull flag. This is a flag, see? To me, they're still falling wedges, man, even if, at the end of the day. But I get it. I get you. I'm with you on that. So here we go. We now have nice support for Bitcoin right here. And we got a high volume node to kind of suck up some liquidity and give us a bit of a bounce too. For those Candle Mafia traders, we love you guys. Shout out to anyone in the Candle Mafia. Shout out to Frankie. Doing a lot of appearances next week. We're going to be on, in 1 week, everyone, we're going to be on Frankie Candles. Then a couple days after that, we should be with Miss Teen Crypto. Shout out to Miss Teen Crypto. Appreciate that. And I think there's even more, honestly. Then we're going to be on BitBoy on August 6th on the day show. Then again, tomorrow we're on Around the Blockchain. So, that's a lot. A lot of appearances in the first week of August. We're going to be hitting you out. Oh, also Ryan Mata. Apparently the Ryan Mata team has made a move. And I would, if Ryan Mata's listening or anyone out there, we would greatly appreciate somewhat of a collaboration. I want to reach out to everybody in the space and do that damage. So, yeah, we're going to be getting around the blockchain, so to speak, if you hear me. So shout out to anyone that supports the lifer. We'll be running, I'll be in my house on a Zoom call, but it would feel like I'm running around the world, which is, what an inspirational thing. Stay in one place, let the whole world come to you is an old Chinese proverb, I've also seen these like a giant, we've talked about this being ahead with like these little shallow shoulders, so we're looking at something like this. I've seen more than my share of these types of patterns in my life. So it wouldn't be the first time. All right. Even if it's shallow like this and we bounce off the node. So that's something that looks beautiful. And that would bring us back up here to 23,600. And that would be that's really the bigger range. You can see we have two big resistance areas for BTC. We got this area here. And I like to just add these nice price notes here. Price note is nice and big and chubby. You can also make these as big as you want. You can make them any color you want. You can go to the settings. I made the back yellow, but you can make the back blue. You could do whatever you want. You know what I mean? You can make the color. You could do whatever you like. You can make it big or small, So 23,500, 23,005 to 23,006 area. The 23,005, we'll call it pretty. That's a big area we're going to have to tackle and tussle with, But that's the measured move if we do get what I call like a shallow shouldered head and shoulder, just something to think about. I've seen these before. Many people haven't. I've been trading for 15 years. I've seen a lot of wacky things that a lot of people haven't seen. So just bear with me on some of the things that make no sense or that you may be like, that's a stretch. Trust me. The truth is far stranger. Life is far stranger than fiction. You know what I mean? Same as in trading. It's no different, So now we're at a standstill here, 22K. I love it. I love it. I love it. I love it a lot. Now, the 1 hour needs to come to the downside. You know, you're definitely overbought, right? So you're like, well, Lifer, you always short when the 1 hour is high. How come you didn't short this time? Number one, I got BOOKMAP on my side. BOOKMAP told me there was more liquidity at 20,800 than there was down there. Look, there's still more liquidity up here at 23,005. Look, 22,500. So it's telling me we're likely, and look at the short squeeze, 536,000 people were shorting. And I tell people to be careful on days like today. You know what it is? Everyone wants to be right. And there's a lot of fear too. So they go with the way they're being told to, you know, look at all those shorts that just got massively liquidated. And look at me waiting for them to get liquidated, watching it happen. Watching a bull flag on the 7 minute with my liquidation, you know, machine open, watching the people just get slaughtered, knowing they're going to get slaughtered. Had they been watching my channel, they wouldn't be slaughtered. They would have went long. I even said to watch the market. I went long yesterday though, you know. It is what it is. If these people had been watching my channel, they would have been like, well, you could, number one, if you watch my channel, you can backtest my channel. You can watch like tons of videos. Watch what I said a year ago. Pick a day from like a year ago and then pick the chart on Bitcoin and like just backtest all the, you know. So if you spend 2 to 3 hours, which takes some time, but I think that's all it takes, is to backtest my channel, go through all the things I've said. I say something every single day. Go through all the things, all the projections, everything I've done. All right? All the high, and I say I don't know where Bitcoin's going to go. I just show you the probability based on the oscillators. That's it. And if they play out, they play out. If they don't, they don't. It is what it is. Look at these people. They got smashed. Let's put up this music. Moment of silence for the liquidations. Why? Why? No! No! Why? Why do the leverage traders have to liquidate themselves like this, babe? Come here, you look so beautiful. Can I have a hug? I feel so bad. Oh, baby.
What happened?
Look at these people. They all got liquidated. $500,000. Oh my gosh.
What were they trying to do, short?
Yeah, they were shorting and they all got rocked.
Were they not a part of your Discord?
They weren't watching the channel.
Oh. I'm gonna walk to get some.
Wow, you look so... Oh my gosh. She's a hot tamale. She shouldn't be on the live. She might... She's so hot, she's gonna melt the mouse.
Are we gonna walk to get someone?
Yeah. Shout out to everybody here on the live. Appreciate you each. Shout out to everybody here on the live. Thank you for jumping on. Yo, man, wise words from the wifer. You made her worried. I know she heard me whining. No, she's a gem, man. She's a gem. She keeps this whole room running, baby. Without her, you guys wouldn't get the beautiful content and the beautiful love. So look, we're pinned on the 1 hour. The shorts, what they do now is they continue to jump in because they figure, well, I was wrong already. Well, I have to be. So right now they're revenge trading into this. So shorts will continue to short into this. I just know that because that's the vibe. And so they're going to probably push us up to 22,005. And most likely, that's also where the heat is. See where the heat is red? It's light down here. Now there's some smart guys beginning to build positions because they're like, yeah, once this is done, we're going to scoop. So these are the smart money getting ready to scoop. This is dumb money running in. And they're going to liquidate these people. It is what it is. Highly likely we get to at least 22,400. As you can see, the hill, if you draw a line, is longer on this line than there. That means there's more volume here than there. Simple as that. Simple as that. Don't overextend BOOKMAP. And if you want BOOKMAP, there's a link in the description. It's better than anything you'll ever need. It'll give you all the... Look what we're doing here with BOOKMAP. Look at the way we're able to circumvent the market by knowing where the orders are. So your oscillators can tell you one thing all they want. Overbought, overbought, overbought. But I want to see where the order book is. I want to see where the whales are. I want to see what's happening on Binance Futures, which moves the market, right? That's where the sauce is. That's where I want to drink my milk from, baby. All right? I tell you what, man, I love this life. Shout out to each and every one of you for being here. So now, how do you figure out where Bitcoin's going to go? It's pinned on the 15. Straight candles. You must use smaller time frames now. And so, look, you swing. And look at this beautiful ascending triangle forming here on the 1 hour. That's got a measured move, and it's likely on the 1 minute. Sorry, on the 1 minute. So, slap me. Slap me for saying the 1 hour on the 1 minute time frame. How dare you? 270 delivery stops, but the lifer energy keeps me going. Baby, keep it up. Grind don't stop, baby. UPS driver by day, miner by night, soon to be a lifer. Shout out to Stanford Mom, man. You're going to keep it moving, baby. Just keep grinding, man. You got it, man. 270 delivery stops to go. You're going to rip through those. Next thing you know, it's going to be 110. Then it's going to be 70. Then it's going to be 60. Then you're going to be at 50, and you're like, wow, if I did 220, 50's like, woo. And then at the end of the night, you're going to roll on out, and you're going to be done and done. And as long as you put that money into savings or do whatever you got to do, I'm not a financial advisor, but I save my money. As long as you save your money, baby, you're going to be fine. So look, this is looking to come a little bit to the downside. And remember, this is an ascending triangle. Ascending triangles are 50-50 patterns. 50% chance it goes either way here. All right. 30-second chart. We'll go to the 5-second. You want to get crazy? Look at the 5-second chart. Suggest that we're going to pump. Isn't this nuts? Bitcoin in the 5-second going up 3.36%. That's insanity. If that actually plays out, I've never traded the 5-second. All right. And I don't want you to either. But it's interesting, isn't it? I am a curious being. That is interesting to me. It says we're going to pump, though. The 5-second chart. Insanity, right? I mean, it looks bullish to me, though. A bullish pattern is a bullish pattern. I don't care if it's on the 7, the 5, or the 1 minute. That's telling me Bitcoin's going to 22,736 on the measured move. You know what? I believe these guys agree with me. So we'll see as they're disappearing liquidity down here and adding it up here. They want to have fun. People keep shorting. They don't believe it. Look, $45,000 more shorts. Now some longs got liquidated. Now everyone's jumping on in. These liquidated leverage traders love to get rocked and wrecked and stomped and slapped. They just love it. I think they're sadistic. They actually like the abuse. You don't have to leverage trade. You don't have to beat yourself up. Just leverage trade. And you can get the pain all in your house alone. You know what I'm saying? Don't get abused by someone else. Just leverage trade and take the pain alone. Anyone who leverage trade today is probably fighting it, you know? But let's actually look at Bitcoin right now and see what's happening, right? Huge punch to the upside. I want to see if it will continue or if the pain is, or if we're done. I mean, 7 minutes says we're done. Yeah, I mean, I've never traded the 30-second or the 5. I've looked at it a few times.
Are we watching right now?
No, the Fed comes on right now.
Okay, so
Yeah, 15 minutes, right? All right. All right, everyone, let's stop that music. We're going to jump on into the Fed meeting. Nice move so far for Bitcoin. But let's jump in and see what's going on.
Notwithstanding the recent slowdown in overall economic activity, aggregate demand appears to remain strong. Supply constraints have been larger and longer lasting than anticipated, and price pressures are evident across a broad range of goods and services. Although prices for some commodities have turned down recently, the earlier surge in prices of crude oil and other commodities that resulted from Russia's war on Ukraine has boosted prices for gasoline and food, creating additional upward pressure on inflation. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 2.25 to 2.5%.
They think they can get inflation to 2%? That's ridiculous. That's the funniest thing I've ever heard in my life. It's like 13.
Confirming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy. Today's increase in the target range is the second 75 basis point increase in as many meetings. While another unusually large increase could be appropriate at our next meeting, that is a decision that will depend on the data we get between now and then. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. As the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation.
Bullish.
Our overarching focus
Bullish.
is using our tools to bring demand into better balance with supply in order to bring inflation back down to our 2% goal and to keep longer-term inflation
2%.
expectations well anchored.
That's not happening, Jerome.
Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store.
Surprise.
We therefore will need to be nimble.
I've been saying inflation's going to do this for the last 5 years. There's no surprise to me. If you watched my channel 3 years ago, I was saying this stuff. If you watch my other channel, I was saying the same stuff. Come on, man. This is not a surprise to me. I started buying Bitcoin 5 years ago because this is not a surprise.
Take the measures necessary to return inflation to our 2% longer run goal. This process is likely to involve a period of below-trend economic growth and some softening in labor market conditions. But such outcomes are likely necessary to restore price stability and to set the stage for achieving maximum employment and stable prices over the longer run.
Look at Bitcoin pumping so
conclude,
hard right now.
we
Look at this,
understand
yo,
that our
going
actions
right to my
affect
measured
communities,
move. Look at
families,
this.
and businesses across the country.
Look at this.
Everything we do is
I
in
called
service
this.
to our public
Yo,
mission.
this is crazy.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Bitcoin pumps to 22,411 as he says that they will
Hi, Chair
lighten.
Powell. Thanks for taking our questions.
He
Rachel
said-
Siegel from the Washington Post.
You heard what he said.
Wondering if you can walk us through your thinking around the decision not to go for a full percentage point increase. We saw a ramp up after the May CPI report came in hotter than usual.
Because he owns Bitcoin.
And then obviously the June figure did too. Was there any discussion
'Cause
of a stronger
Jerome
hike
owns
at this
Bitcoin.
meeting?
Sorry.
Thank you.
Sure. So we did judge that a 75 basis point increase was the right magnitude in light of the data and in the context of the ongoing increases in the policy rate that we've been making. I'd say that we wouldn't hesitate to make an even larger move than we did today if the committee were to conclude that were appropriate. That was not the case at this meeting. There was very broad support for the move that we made. You mentioned the June meeting. We had said many times.
Someone's got to throw a $50 super chat if we hit that measured move. Come on now. If I hit my measured move, you got to throw it. Someone's got to do, come on, man. It'll be like the 5th one in a row since yesterday when I called the bottom of the divergence to the 7 minutes.
Inflation has continued to disappoint in the form of the June CPI reading.
Thank you so much for taking our questions. Colby Smith with the Financial Times.
Colby.
As the committee considers the policy path forward, how will it weigh the expected decline in headline inflation, which might come as a result of the drop in commodity prices, against the fact that we are likely to see some persistence in core readings in particular? And given that potential tension and signs of any kind of activity weakening here, how has the committee's thinking changed on how far
Ooh,
into
look at
restrictive
Bitcoin.
territory rates
It's
might
pumping.
need to go?
You see that? Ooh.
So
Ooh. It's going to,
guess
it
I'd
wants
start
that
by
measured
saying
move. Ooh.
we've been saying we would move expeditiously to get
Woo.
to the range of neutral, and I think we've done that now. We're at 225 to 2.5, and that's right in the range of what we think is neutral.
Someone
the
called
question is,
along yesterday. I don't
how
know
are we
who it
thinking
was.
about, the path forward. So one thing that hasn't changed is that it won't change is that our focus is going to continue to be on using our tools to bring demand back into better balance with supply in order to bring inflation back down. That'll continue to be our overarching focus. We also said that we expect ongoing rate hikes will be appropriate and that we'll make decisions meeting by meeting. So what are we going to be looking at? We'll be looking at the incoming data, as I mentioned, and that'll start with economic activity. Are we seeing the slowdown in economic activity that we think we need? And there's some evidence that we are at this time. Of course, we'll be looking at labor market conditions, and we'll be asking whether we see the alignment between supply and demand getting better, getting closer. Of course, we'll be looking closely at inflation. You mentioned headline and core.
That 30-second chart looks like it's going to pump.
It's not for core, but we look at core because core is actually a better indicator of headline and of all inflation going forward. So we'll be looking at both, and we'll be looking at them at those both really for what they're saying about the outlook rather than just simply for what they say. But we'll be asking, do we see inflationary pressures declining?
It's going to hit
Do
my
we
measured
see
move.
actual readings of inflation coming down? So in light of all that data, the question we'll be asking is whether the stance of policy we have is sufficiently restrictive to bring inflation back down to our 2% target.
Looks like these rich guys like the
And
30-second
It's also
chart.
worth noting that these rate hikes have been large and they've come quickly, and it's likely that their full effect has not been felt by the economy. So there's probably some additional tightening, significant additional tightening in the pipeline. So where are we going with this? I think the committee broadly feels that we need to get policy to at least to a moderately restrictive level. And maybe the best data point for that would be what we wrote down in our SEP at the June meeting. So I think the median for the end of this year, the median would have been between 3.25 and 3.5. And then people wrote down 50 basis points higher than that for 2023. So that's, even though that's now 6 weeks old, I guess, that's the most recent reading. Of course, we'll update that reading at the September meeting in 8 weeks. So that's how we're thinking about it. As I mentioned, as it relates to September, I said that another unusually large increase could be appropriate, but that's not a decision we're making now. It's one that we'll make based on the data we see.
Soft.
And we're going to be making decisions
Soft.
meeting by meeting. We think
He's
it's
soft.
We think it's time to just go to a meeting by meeting basis and not provide the kind of clear guidance that we had provided on the way to
Whoa,
neutral.
whoa, whoa, whoa. Clear guidance. Yo, that's the worst way. He basically said we're not going to be clear anymore. We're going to do whatever we want behind the. It's so funny.
Chair
Like, how
Powell,
could
you
you
said
say
that
that?
your
Isn't that what he
policy
said? I
works
mean,
through influencing expectations, and that policy needs to be at least moderately restrictive, which means you need financial conditions to stay tight. Futures market
Gotta stay
pricing
tight.
currently
Gotta
implies
stay
you will
tight.
raise rates this year along the lines of your June SEP, but then lower them a few months later next year. Are these expectations consistent with the need to keep financial conditions tight in order to moderate purchasing power and bring inflation back to 2%?
So I'm going to start by pointing out that it's very hard to say with any confidence in normal times what the economy is going to be doing in 6 or 12 months. And so to try to predict what the appropriate monetary policy response would be, I mean, of course, we do that in the SEP, but nonetheless, you've got to take any estimates of what rates will be next year with a grain of salt, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite
Bitcoin.
high. So again,
Uncertainty,
the
good for
best data,
Bitcoin.
the only data point I have for you really is the June SEP, which I think it's just the most recent thing that the committee's done. Since then, inflation has come in higher, economic activity has come in weaker than expected. But at the same time, I would say that's probably the best estimate of where the committee's thinking is still, which is that
Shoulder,
we
head, and
would get to a
shoulder.
moderately restrictive level by the end of this
Trouble
year, by
brewing.
which I mean somewhere between 3 and 3.5%, and that the committee sees further rate increases in 2023. As I mentioned, we'll update that, of course, at the September meeting, but that's really the best I can do on that.
You said inflation had been a little bit hotter than anticipated. Has your view of the terminal rate changed since June?
So I wouldn't say it was. I think we didn't expect a good reading, but this one was even worse than expected, I would say. I don't talk about my own personal estimate of what the terminal rate would be. I will write down that in. It's going to evolve. It's obviously it has evolved over the course. I think for all participants, it has evolved over the course of the year as we learn how persistent inflation is going to be. And by the time of the September meeting, we will have seen 2 more CPI readings and 2 more labor market readings, and significant amount of readings about economic activity and perhaps geopolitical developments. Who knows? It'll be a lot. It's an 8-week intermeeting period, so I think we'll see quite a lot of data, and we'll make our decision at that meeting based on that data.
Gina. Hi, Jarrell. Thanks for taking our questions. Gina Smilik, New York Times. You kind of alluded to this earlier, but I wonder, in the event that you see several months of very weak headline inflation numbers because oil prices are coming down so much, but core inflation continues to be strong or even picks up, I wonder how you would think about that.
So it's hard to deal with hypotheticals, but I just would say this: we would look at both, and we'd be asking ourselves, are we confident that inflation is on a path down to 2%?
It's a little
That's really the
shoulder
question,
ahead
and we'll be
shoulder
making, our policy stance will be set at a level
Wanna see if the
ultimately
flag holds.
at which we are confident that inflation is going to be moving down to 2%. So it would depend on a lot of things. Of course, as I mentioned, core inflation is a better predictor of inflation going forward. Headline inflation tends to be volatile. So in ordinary times, you look through volatile moves in commodities. The problem with the current situation is that if you have a sustained period of supply shocks, those can actually start to undermine or to work on de-anchoring inflation expectations. The public doesn't distinguish between core and headline inflation in their thinking. So it's something we have to take into consideration in our policymaking, even though our tools don't really work on some aspects of this, which are the supply side issues.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. Earlier this week, the president said we are not going to be in a recession. So I have two questions off of that. Do you share the president's confidence in not being in a recession? And second, how would or would not a recession change policy? Is it a bright line, sir, where contraction of the economy would be a turning point in policy, or is there some amount of contraction of the economy the committee would be willing to abide in its effort to reduce inflation?
So as I mentioned, we think it's necessary to have growth slow down, and growth is going to be slowing down this year for a couple of reasons. One of which is that you're coming off of the very high growth of the reopening year of 2021. You're also seeing tighter monetary policy, and you should see some slowing. We actually think we need a period of growth below potential in order to create some slack so that the supply side can catch up. We also think that there will be, in all likelihood, some softening in labor market conditions, and those are things that we expect and we think that they're probably necessary if we were to have to get inflation, if we were to be able to get inflation back down on a path to 2%, ultimately get there.
Can we go to 23K or 24K today for Bitcoin? It's possible.
So we're going to be focused on getting inflation back down, and as I've said on other occasions, price stability is really the bedrock of the economy, and nothing works in the economy without price stability. We can't have a strong labor market without price stability for an extended period of time. We all want to get back to the kind of labor market we had before the pandemic, where differences between racial and gender differences and that kind of thing were at historic minimums, where participation was high, where inflation was low. We want to get back to that, but that's not happening. That's not going to happen without restoring price stability. So that's something we see as something that we simply must do, and we think that we don't see it as a trade-off with the employment mandate. We see it as a way to facilitate the sustained achievement of the employment mandate in the longer term.
Howard Schneider with Reuters. Particularly in regard to expectations, it's been said the last few months that the risks of doing too little outweighed the risks of doing too much. Does that remain the bias?
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think.
So I did go a little light in a Phantom short, Phantom long, very light, Phantom 3L. Hit for 17%. Not bad. I got to close it right now. It wasn't big, but 17%. I mean, but again, I didn't go heavy because, a couple, whatever. I'm not, but it was nice.
That there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some some softening in labor market conditions. So that's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. So, you know,
He seems like
I
obliterated.
do think, as I said just now, that
Like someone told him, like, you better
restoring
just...
price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
Looks like we're going to hit my target.
As a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
Yeah, we're trying not to make a mistake. Let me put it this way. We do see that there are two
He doesn't
sided
like that word
risks. There would be
mistake.
the risk of doing too much.
He don't want to use that word.
And you know, imposing more of a downturn on the economy than was necessary.
Oh.
But the risk of doing too little.
That's exactly what I
and
want to
leaving
hear
the
right now. That's
economy
so
with
bullish right
so much
there.
inflation, it only raises the cost. If you fail to deal with it
Look at
in the
Bitcoin. The
near
second
term,
he
it
said
only
that,
raises the cost
hit my
of,
target. Look,
dealing with it.
bam, yo, because
To the
exactly
extent
what you
people
want to
start
hear.
to see it as just
Woo!
part of their economic
That's
lives,
funny.
they start to factor high
Look,
inflation
you can see
into their
it.
decisions.
You can see it in the
When
charts,
that-
baby.
on
You
a
can see it
sustained
in
basis,
the charts.
when that starts to really happen.
Now
we don't
I'm
think
up
that's happening, but when that
19%.
starts to
Raise that
happen,
stop
it
loss,
just gets that much
baby.
harder, and the pain will be that much greater. So I really do
Phantom
think that it's
3L,
important
baby.
that we
Phantom
address this
3L.
now.
Shout out to anyone that
and get it
rode
done.
through with me. I did say to trade easy and be easy, but I had one
Thanks,
little
Chair
trade
Powell.
open. It
Neil
wasn't
Rowe
heavy.
from Axios.
right.
To build a little bit on what Steve was asking,
Man.
do you believe the United States is currently
Now
in
we
a
came,
recession?
look, a second from
will
that.
the
This is
GDP
the biggest target
reading
here.
tomorrow affect that judgment one way or the
We
other?
called
And
22,800.
has your assessment of the risk of
Went to
recession changed any in
22,715.
recent weeks?
So
That's my fifth call in like less
I
than
do not
24
think the
hours
US
in
is
a row.
currently in a recession.
And
And
knocking
the reason
Bitcoin
is
out like a
there's just too many areas of the economy that are performing
Up 20% in the Phantom Long,
you know,
baby.
too
Dear
well.
Lord,
And-
thank
and
you
of
for the
course I would point
blessings
to
you've
the
given
labor
me.
market
Amen.
In particular, as I mentioned, it's true that growth is slowing, and for reasons that we understand, really the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now. But if you look at the labor market, you've got growth, I think payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market, and it's just not consistent with, 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the
Oof, watch
US
Bitcoin about to
economy is
pump
in
now.
recession right now.
Ooh, pump. I'd be surprised I wouldn't pump right
Haven't
now.
seen
Brrrring.
it, and we'll just have to
Not
see
in a
what it
recession.
says.
Brrrring.
I don't,
Just buying immediately.
I mean, I would say generally the GDP numbers do have a tendency to be revised pretty significantly.
Dow, the
It's
S&P,
just- it's just
Nasdaq,
it's very
oil,
hard-
gold,
it's very
going
hard to
crazy,
accumulate US GDP. It's a large
baby.
economy, and a
Man,
lot
we
of-
could punch
a lot of
through
work and
this.
judgment goes into that, but
Telling you, man, you
tend to
can't
take
shy away
first
from the pain. You
GDP
got to run
reports, I
right
think,
through it.
with,
Shout out to the
with a
620
grain of
viewers. Can we get the
salt, but of
likes up to
course
the
it's
watchers,
something we'll be
please? Everyone, I
looking
know I
at.
haven't said it. Come on now. 325 likes. Let's get the likes all the way up. This is the second
Hi,
stream of
Chair
the
Powell.
day.
Victoria Guida with Politico. I wanted to ask about the new conflict of interest rules that you all rolled out. Some senators have written asking for those rules to have more teeth and to have sort of more transparency about the Fed officials' financial activity. I was wondering if you could speak to that and whether you intend on toughening those rules in any way.
So those are the toughest rules in place, at any comparable institution that I'm aware of. We think, we thought about this carefully, and we put them in place, and we're building the infrastructure so that the enforcement will be tight. That actually you won't be able to make trades unless they're pre-cleared, and the amount of trades you make will be they'll have to be 45 days or more before any FOMC meeting. It's just I think we've really created a very strong and robust set of rules that will support public trust in the institution. And again, we're just now, the system is just now up and running, and I'm proud of what we did.
Hi, Katarina Saraiva, Bloomberg News. I wanted to ask a little bit more about the 75 basis points versus 50 versus 25. Can you talk a little bit about what kind of goes into your thinking for, making the decision on how much to raise rates? And, just talking about a very large amount that you alluded to, could that possibly be 100 basis points? And then kind of along those lines, is there any sort of weakness in the economy outside of inflation measures that would lead you to slow your hiking pace?
Just pausing it for a split second here. I got to show you something fast. Is Bitcoin looks like it's going to go to the next target, 22,894. Looks like we're going to 23K.
So that's how we're thinking about it. And we're, in terms of September, we're going to watch the data and the evolving outlook very carefully and factor in everything and make a decision in September about what to do. And I'm not really going to provide any specific guidance about what that might be. But I mentioned that we might do another unusually large rate increase, but that's not a decision.
Don't say that.
So
shut up.
We are, we're going to be guided by the data. And I think you can still think of the destination as broadly in line with the June SEP, because
Look at the red
it's only
immediately.
6 weeks old, and
so
sometimes SEPs can get old really quick. I think in this one I would say is probably the best guide we have as to where the committee thinks it needs to get at the end of the year and then into next year. So I would point you to that.
Hi, thank you. Chris Rugaber at Associated Press. I wanted to ask about, right now there is a sort of growing gap between the Fed's preferred measure of inflation, the PCE index, and the one that's followed by the public, the CPI, of course. How do you expect to handle this divergence if the PCE starts to come down enough for you to consider slowing rate hikes, even if the public is still seeing much higher CPI ratings? Thank you.
So it's an interesting situation. Of course, we've long used PCE because we think it's just better at capturing the inflation that people actually face in their lives. And I think that view is pretty widely understood. That said, the public really reads about CPI. And the difference really is because the CPI has higher weights on things like food, gasoline, motor vehicles, and housing than the PCE index does. And so that accounts for a lot of the difference. However, over time, they tend to come together.
I'd start taking profits. I'm just saying,
given the
I raised my stop loss to 17.75%. Everyone should be up around the same. You can't do what I tell you what to do. I'm not a financial advisor, but I raise my stop loss. I'm beginning to take profits. I sell into the green. I do not wait for it to go back down. I just want to make that clear.
If it got to 40 basis points.
Don't play yourself.
Now it's
pay yourself.
Now it's much
That's my new saying.
because of the things I
don't play yourself, pay yourself.
So we'll be
I just
watching
made it
both
up. I like it.
But again, the one that we think is the best measure always has been PCE, at least since I think we.
Shout out to Tom Crown.
20 plus years ago.
We love you, Tommy.
And then just when I'm looking
I'd like
at
to weave
Bitcoin,
a couple of things
I
together,
am
Mr. Chairman. Michael McKee from Bloomberg
talking
TV and radio.
about-
You said that the destination pretty much remains the same in terms of your end of the year target, but where are you in the journey? We've now seen the federal stimulus programs end. You mentioned consumer spending,
Stop
business
pressing him.
investment have slowed.
Stop pressing
Are
him.
they
He's going to look stupid and
moving
mess up the
at
economy. Just
a
let him
pace
say
you
what he wants
would
to say and go
expect,
home.
Or is demand still greater than supply?
Don't
too
ruin
much
this
greater
meeting.
than
It's going
supply
great.
That you need to do significantly more? And I ask because there are lags in the impact
course
of
there are.
monetary policy, as you mentioned.
It's horrible.
And a lot of this might hit in 2023. The strong dollar effect may hit in 2023 when the economy might be weak. How do you know where you are and where you think you need to get to?
Well, just talking about demand for a second.
Don't ask him
As I
questions like
mentioned in my remarks,
Doesn't have the right
you
answer.
I think you
Leave
pretty
us
clearly
alone now.
do see a slowing now in demand in the second quarter.
Phantom 3L now
Consumer
at
spending,
19%.
business fixed investment, housing, places like that. I think people widely looked at the first quarter numbers and thought they didn't make
Now
sense.
at 20, the highest
might
it's
have
been.
misleading in terms of the overall direction of the economy. Not true of the second quarter, but at the same time, you have this labor
Bitcoin
market. So there are
pumping.
plenty of experiences
Target
where
22,895
has been reported.
If you're in a scout
as
with
weak,
me,
and
baby.
the labor market is strong.
We trading live
and the
right now. I
economy
just
has
want to make it
gone
clear
right
while
through
we're
that
doing all
and
this.
Been fine.
This
So
isn't just,
that's happened.
hey, look at
many
this.
times, and it used to happen, if you remember, in the first quarter of every year for several years in a row. GDP was negative, and the labor market was moving along just fine, and it turned out to just be measurement error. It was called residual seasonality. We don't know the situation. The truth is, though, we think that demand is moderating. We do. How much is it moderating? We're not sure. We're going to have to watch the data carefully. There is a great deal of money on people's balance sheets that they can spend. The unemployment rate is very low. The labor market's very hot. There are many, many job openings. Wages are high. So it's the kind of thing where you think that the economy should actually be doing pretty well in the second half of the year. But we'll have to see. We don't know that because you do see a marked slowing in the second quarter that is fairly broad. So we'll be watching that. We'll be watching that. Of course, as I mentioned, we do want to see.
He said nothing.
demand
Don't
running
ask him those questions.
Below potential for a sustained period.
Don't
to
ask me
create
that. The
slack
meeting's
and-
going
and-
well.
And give it inflation.
I
a chance to
BS my
come
way
down.
through this pump. Now leave us alone.
Hi, thank you, Chairman. Nicole Goodkind, CNN Business. When does the committee expect to see a meaningful slowdown in the labor market, and how much weakness will it accept with regard to slower job growth and higher unemployment before it pauses or begins to think about cutting rates?
That was loud.
So I think you're already seeing, you've seen in the labor market, what you've seen is a decline from very high levels of job creation last year and earlier this year to modestly slower job creation. Still quite robust, as I mentioned. So you're seeing that. You're seeing some increase in initial claims for uninsurance, although that may actually have to do with seasonal adjustments. We're not sure that that's actually real. There's some evidence that wages, if you look at average hourly earnings, they appear to be moderating. Not so yet from the other wage measures, and we'll be getting the Employment Compensation Index measurement, I think, on Friday, I guess. And that's a very important one because it adjusts for composition. So I'd say you and also anecdotally, you hear much, the sort of level of concern on the part of businesses that they simply can't find workers is probably down a little bit from what it was, say, for example, late in the latter parts of last year. So there's a feeling that the labor market is moving
shoulder head,
back into
inverted head and
balance.
shoulder. You see that?
If you look at job
Which is
openings
always
or quits,
an
you
ascending
see them moving
triangle.
sideways or perhaps a little bit down. But
Always
it's only the beginning of an adjustment. But I think most also, if you look at, I mean, once you start citing these things, you can't stop. If you look at the household survey, you see much lower job creation. And
He's flirting with her.
Household survey
See
can
that?
be quite
Hey,
volatile,
honey.
but has
It's all
no
smiles.
jobs created in the last 3 months. So that might be a signal that job creation is actually a little bit slower than we're seeing in the establishment survey. So executive summary, I would say there's some evidence that labor demand may be slowing a bit. Labor supply, not so much. We have been disappointed that labor force participation really hasn't moved up since January. That may be related to yet another big wave of COVID, and that there's evidence that that's the case.
Oh, don't do that.
So we're not seeing much
Don't
in
do
the
that.
labor supply.
Don't do
Nonetheless,
that. I don't want to hear
would
that.
say some
Don't say those two
progress
words
on
together ever again for
demand
the rest
supply
of your
gap
life.
alignment.
Ruin my freaking measured move. We're gonna hit it. Look,
We're going to be looking at.
I called 22,750, and by
inflation
golly,
as
Geo,
well.
I will
You know,
hit it on my
as I
live
mentioned,
stream. If I
we
will,
need to
I'll
see
go home
inflation
and
coming
cry
down.
myself to
We
sleep
need
and
to
eat
be
a pile of
confident
ice
that
cream.
Inflation is going to get back
Dude, we're
down
gonna
to
do it.
mandate
We did
consistent
it.
levels.
We did it.
That's not something we can avoid
Yes.
doing. That really needs to happen.
Yes. Yes.
And
Yo, I called this down
we do
here.
think, though, that the labor
I called this
market
down
can
here,
adjust,
baby. Come on
because of
now.
the huge
Come on
overhang
now.
of job openings.
Come
of excess
on
demand,
now,
really.
baby,
There should be
bang,
able
yo,
to
we
be
hit it.
an
Yo.
adjustment that would have perhaps lower than expected increases in unemployment, lower than would be expected in the ordinary course of events, because the level, the ratio.
That's it. I mean, come on. I was off by $2.
Vacancies
Enough
to
is enough.
unemployed is just
Don't do
out of
that to me.
keeping with historical experience, and that suggests that this time could be different.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So you said the path may be narrowed to avoiding a recession. So how close are we to a recession? And then how do forecasts of possible recessions from banks and economists, how does that make a soft landing you've talked about more difficult?
So as I mentioned, it doesn't
Soft
seem that the
landing.
U.S. economy is in recession right now. And I think you do see weakening, some slowdown.
Phantom
let's
3L
put
of
it that way, in
20.7% now,
growth, and you
going
see
into
it
the
across
20
some of the
percentiles.
categories that I mentioned, but there's also just the very strong data coming out of the labor market still. So
Raise my stop
overall,
loss
you would
to-
say that in all probability, demand is still strong.
19.25.
And the economy is still on track to continue to grow this year. But the slowdown in the second quarter is notable, and we're going to be watching that carefully. Sorry, what was a lot?
Forecasts, how do bank forecasts of possible recessions, economists, does that affect the soft landing?
Well, we've said since the beginning, I think, that having a soft landing is what we're aiming for. Of course, that has to be our goal. It is our goal, and we'll keep trying to achieve it. I'm
live trading. Forgive me.
At the beginning, we said it was not going to be easy. It was going to be quite challenging to do that.
Oh, I happen to trade. Unlike these other YouTubers, I actually do trade. Sorry.
It's unusual. It's an unusual event. It's not a typical event, given where we are. If there is a path to it, and we think there is, it is the one I mentioned, that the labor market actually has such a large amount of surplus demand that you could see that demand coming down in a way that didn't translate into a big increase in unemployment, as you would expect in the ordinary course, because frankly the imbalance is so much greater. But we don't know that. I mean, this is a case of first impression. So anyone who is really sure that it's impossible or really sure that it will happen is probably underestimating the level of uncertainty. And so I would certainly say it's an uncertain thing.
Soft landing.
Nonetheless, it's our goal to achieve it, and we'll keep trying to do that.
Now you
Thank
play
you,
this
Mr.
measure
Chairman.
move, see?
Jean Young with Market News. I wanted to ask about the balance sheet reduction program.
That's gonna take us
It's been
to
working for a couple
22,009,
months now,
41.
and in a different environment than the last time the Fed did it. What are you learning about how it's working and
See
how
how I'm
markets
doing
are
this?
reacting?
Look, the shoulder, the head, and the shoulder.
And is reaching the minimum level of reserves needed in the system still several years away at the current pace?
So we think it's working fine. As you know, we tapered
Now,
up into it,
21.79%
in September
in the
we'll go to
Phantom
full
3L
strength.
long.
And the market seemed
Shout
to
out
have
to Any
accepted
Life
it.
for rocking with me.
By all
And any one of their
assessments,
trades.
the market should be able to absorb
I didn't post any
this, and
shorts,
we
I'll tell you
expect
that.
That'll be the case. So I would say the plan is broadly on track. It's a little bit slow to get going because some of these trades don't settle until for a bit of time, but it'll be
I
picking
raised
up
mine
steam.
to 20.75.
So, and I guess your second question
taking
was
these gains, baby.
Was getting the
I just
process of getting back down to the new equilibrium will take a while, and that time it's hard to be precise, but the model would suggest that it could be between 2.5 years, that kind of thing. And this is a much faster pace than the last time. Balance sheet's
I got stopped out at
bigger
21.7% gains
but
in the trade.
We looked at this carefully, and we thought that this was a sensible pace, and we have no reason to think it's not.
Sand 3L didn't move.
Hi, Chairman Powell. Brian Chung, Yahoo Finance. Looking at financial conditions, it seems like the tightening has slowed as of late with the 10-year coming down, 30-year fixed mortgage rates also going a bit sideways when we talk about a hot housing market still. Just wondering if you find financial conditions tight enough, especially as you continue to raise rates.
So a big piece of that is inflation expectations, break-evens coming down. Which,
Phantom loves to follow Bitcoin.
Is a good thing. It's a good thing that markets do seem to have confidence in the committee's commitment to getting inflation back down to 2%. So we like to see market-based, readings of inflation expectations come down. Broader financial conditions have tightened a good bit. I mean, the way this works is we set our policy.
No, they kept the read at
and
0.75.
Financial conditions react, and then financial conditions are what affects the economy. So, and we don't control that second step. We're just going to do what we think needs to be done. We're going to get our policy rate to a level where we're confident that inflation will be moving back down to 2%. Confident. So that's how we're going to take it. And of course, we'll be watching financial conditions to see that they are appropriately tight and that they're having the effect that we would hope.
He's so good at saying a lot of stuff, but not saying anything at all.
They're having, which is to see.
Like, he's a pro at that. He can use 100 words and you'll still be like,
from Market Watch.
Did he really answer my question?
I wonder if you can go back a little bit in time to before there was this outbreak of inflation, when the committee put in place forward guidance on tapering asset purchases. I think it was December 2020. There's a recent speech by Fed Governor Waller talking about that and saying that maybe that was too tight, that kind of condition, and it put you a little bit behind. Not his words, but maybe, we're kind of late to react to some of that inflation. So could you talk about that decision, and have you looked at it in hindsight at all? Thank you.
So, yeah, we said that we wouldn't lift off until we had basically achieved our dual mandate goals. And the reason we did it in real time was that the first look at the new framework that we'd
my next target
rolled out.
I'm using the 30-second chart.
Plenty of people were saying, it's not credible, you'll never get inflation to 2%. Some of our critics now who say inflation is too high were the same ones who were saying you'll never get to 2%. Well, but anyway, that's what happened. So we thought we needed to really make a strong statement with that. It wasn't part of the framework. The December 20 guidance was not part of our overall new framework. It was just guidance that we put in place. So I would say two things. One, I don't think that
David, I haven't learned a single
changed
thing.
The situation, but I have to admit, I don't think I would do that again. I don't think I would do that again. We, ultimately the situation evolved in a highly unexpected way for all of us, and maybe the learning is that leave a little more flexibility than that. But did it matter in the end? If you look at, I really don't think it did. I'm not sure it would have mattered if we'd been raising rates 3 months earlier. Does anybody think that would have made a big difference? I mean, lots of central banks were raising rates 3 months earlier, and it didn't matter. I mean, this is a global phenomenon that's happening now. Admittedly different in the United States.
This was going to happen. But, I've been saying this was going to happen for 5 years. Am I a genius? No. This is obvious when you print money to zero.
Just a lot of people talk about that.
Done it through 600 years. All the different currencies throughout history have done it.
I know you haven't talked.
Look at the
about
shorts.
It too
They
much,
just
but
didn't
you were
learn.
worried
They
at
just
the
kept
time
going
about
in.
Repeating.
And I told you the liquidity was up here,
You had
but you
experience
didn't
as a
listen.
governor. So was
No,
that
most of my
part
life
that?
is the we hope.
Where did that fit into all this?
Or you might become a lifer today when you
So I
got
think
caught with
we
your pants
learned
down shorting.
There
and now
have
you're
been
like,
multiple taper tantrums, right? So there was the famous one in
Taper tantrums.
2013.
Hilarious.
There's what happened at
Look,
the
shoulder,
December
head,
18
and a shoulder,
meeting
pump it up.
where
Double bottom.
markets can ignore developments around the balance sheet for years on end and then suddenly react very sharply. So we just had developed a practice of moving predictably and doing it in steps and things like that. It was just like that's how we did it. And so we did it that way this time. We were careful to take steps and communicate and all that kind of thing. We were trying to avoid a tantrum because they can be quite destructive. They can tighten financial conditions and knock the economy off kilter. And when it happens, you have to really in both 13 and 18 really had consequences for the real economy, 2, 3, 4 months later. So we were trying to avoid that. That was part of it. Again, I don't think that's the real issue of 2020 and 21 was just trying to understand what was happening with the reopening economy. That was where the big uncertainty was. And our view was that these supply side issues would get better, that people would go back to work, that labor force participation would come back, everyone would get vaccinated, schools would open, kids would be in school, and labor force participation would jump back up. That was very broadly thought to be the case. These supply side issues would get solved reasonably quickly, and they just haven't. They still haven't. So that's really the learning, I think, is around how complicated these supply side issues can be. We haven't seen this before in a long, long time, and so that's really what accounts for the pace at which we moved. And we did when inflation changed direction really in October. We've moved quickly since then. I think people would agree. But before then, inflation was coming down month by month, and we kind of thought we had the story.
My measured move is now
right, but then I think in October.
He's getting boring to listen to, right? We got to get through it. My measured move now is 22,960 on the 30-second chart. As we continue to watch Bitcoin on the 30-second, and my measured moves just keep getting hit 1, 2, 3, 4, and the first one, bada bing, bada boom, and we're watching parabolic price action in Bitcoin on the smaller time frames. It's been fun to do while we watch the live.
GDP number tomorrow for the second quarter. Would the Fed consider the U.S. in a recession?
If you didn't know what was going on right here. That's the 30-second chart for Bitcoin.
What is your definition
live, baby, live.
for the start of a recession?
So the Fed doesn't make a judgment on that. You know, we're focused on the dual mandate and using our tools to achieve maximum employment and price stability. We don't say there is now a recession, that kind of thing. So that wouldn't be something we do. We would look at the data tomorrow, and no doubt we'll look at it very carefully and draw
famous last
whatever
words
applications
tomorrow.
we can. As I mentioned, though, you know, if you think about what a recession really is, it's a broad-based decline across many industries that you know, that's sustained for more than a couple of months, and there are a bunch of specific tests in it, and it just doesn't seem like that now. What we have right now doesn't seem like that, and the real reason is that the labor market is just sending such a strong signal of economic strength that it makes you really question the GDP data. But again, that's not a decision that we make, and we won't reach a conclusion one way or another on that.
Thank you very much. Simon Rabinovich with The Economist. You've said that some softening in the labor market is needed. Within the Fed, there are staff economists who've argued that NIRU, the non-inflationary rate of unemployment, might be as high as 5 to 6% right now, which obviously is a lot higher than the current rate of 3.6. What's your assessment of NIRU? Is that something that came up in discussion with the committee?
So I think broadly, a lot of economists think that the natural rate of unemployment will have moved up.
Everyone, I have to move the weekly screen share tonight. Usually it's Thursday. If you're in the Discord, we have a private weekly screen share every single Thursday from 6:30 to 8:30. Tonight is going to be from 6:45 to 8:15. Just want to let you guys know, all right? Just to put it out there, we're doing a weekly screen share, but today I'm moving it. A lifer in town tomorrow offered to meet up, have dinner and stuff, and I would love to do that. So we're making sure that we have that space open for the lifer that's in town. So that's the main reason. So we're doing the live screen share tonight. Also, it's a really good time to do the screen share with everything that happened, the anticipation, the meeting. We got through it. We went through it. We can kind of breathe, and we can get on to the rest of the summer months of trading.
To some, I think you could, in principle, you could see it coming back down pretty significantly. And that would also, by the way, take pressure off of inflation, because it's that gap. It's the gap between actual unemployment and the natural rate that really is relevant for, you know, the negative slack we have in the economy by the over-tight labor market. So if you were to, you wouldn't observe this. It's an unobservable, but you could actually be seeing inflationary pressures coming down if that does happen. And we don't control that, but that's something that logically, if the pandemic and the disorder in the labor market cause the natural rate to move up, then as the labor market settles down, in principle, you should see it move back down.
Almost every shape I've drawn has hit the measure move.
Thank you, Chair Powell. Jeff Cox from CNBC.com.
22.9.
Just a question about, hate to keep banging the drum about recession, but most of the polls that we're seeing now from the public, people believe that we're already in a recession or heading for one. Economists pretty much the same thing. They're being told by folks like you and in the administration that we're not in a recession or we're not heading for a recession. Frankly, coming from the same people who told them that inflation was transitory, telling them now that we're not heading for a recession. So what would you tell the public to reassure them
come
now?
on,
that
man. Don't
you
ruin the
feel
meeting, man.
confident
Things are
in
going
your
well. Get this
forecast
guy
going
out of
forward and
here.
the Fed is
Yo,
ready
pick
to
him up, man. We're letting this
respond
dude lie
to
and say whatever he wants so we can
potential
pump our
downturn
bags.
in the economy.
Take him and get him out of the room.
All I really
Get
said
that
is
guy
I
out
don't
of the
think
room.
it's likely that the U.S. economy is in a recession now, and I've explained why that is the case. It's because you do see a very strong labor market, and I think the public will see that as well. You know, going forward, what we've seen is a slowing in spending, as I mentioned. We've seen the very beginnings of perhaps a slight lessening in the tightness of the labor market, but it would only be the beginnings. So, and I mentioned that I also said that our goal is to bring inflation down and have a so-called soft landing.
Yes, the
by which I
rate the
mean,
rate number is 0.75.
landing that doesn't
chemistry.
require a significant.
That happens at
increase,
2.
a
Then
really
they're meeting
significant
2:30.
Increase in unemployment. We're trying to achieve that. I've said.
Look at the views:
on many
2, 3,
occasions
3,
that
3,
we
3
understand
every
it's gonna
time.
be quite
Everyone.
challenging, and that it's
Always.
gotten more challenging.
Always.
Over recent months.
Always.
Thanks, Chair Powell. Kyle Campbell with American Banker. The FOMC has historically tried to avoid the kind of rapid monetary
Nice,
policy
young buck in the
tightening
game. Let's go, Kyle.
that has happened so far this year. How concerned are you that the rate hikes that we've seen thus far might increase risks to financial stability, not just domestically, but globally?
I mean, there are precedents for the FOMC moving very quickly. For example, 1994, 1980, even more so. So we've been known to do that when it's the appropriate thing to do, and this year it clearly is. I would say that given how quickly we've moved, I'm gratified that while that basically markets have been working, they've been orderly. There's been some volatility, but that's only to be expected. From a financial stability perspective, you know, asset values are down, which in some sense lowers vulnerabilities. It's when they're really high that you would worry that they're vulnerable to a fall. Actually, many asset values have come down. I think you've got a well-capitalized banking
That's a good
system.
point.
I think
I have to give it to him. That's a good point.
Households are
It's a good
generally
point.
in
They can
about
go
as
down
strong
lower. They can go
financial
further
shape
down, though.
as
But
they've
that's a
been
good point.
in a very long time. Or
I've never
perhaps
said
ever,
anything about him saying
given,
but that.
given
He
what
made a
the money
good
that's on
point.
people's balance sheets and
If it's down
so
already, it can't
you
go
have
down
a pretty-
anymore.
from a financial stability standpoint, you have
I mean, that's what he said. It's so
pretty
funny. I
decent
can't
picture.
believe it. But I mean, hey, that was the
Now,
best thing you could say.
Macroeconomic, there are plenty of macroeconomic issues that don't rise to the level
says
of
we're going
financial
to
stability
23K.
concerns. By financial stability, you know, we think of that as things that might undermine the working of the financial
Raise the
system.
roof
So
to right
big,
there.
serious things. That's not to say that people at the lower end of the income spectrum aren't suffering, because they are. They're suffering
shorts
from
are
high
just
inflation.
getting
They're going to the you know, to the grocery store and finding
is
that,
all short
that,
squeezed.
You know, in many cases, their paycheck, it doesn't cover the food they're accustomed to buying. We're seeing actual, you know, real declines in,
This is
in
my
food
tweet.
consumption, and you know, it's very concerning. It's very unfortunate, and that's why we're really committed to bringing down inflation.
21,009. Beware of the short
reasons.
squeeze. I called it.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. I can remember when you held your first news conference and you vowed to be a very plain-spoken chairman, and
Look at the short squeeze.
we're thinking today about the impacts of
Oh.
Fed policy on individuals
got
as
everyone
well.
so
What
bearish.
would you say to individuals
Don't
or
listen to the
households
news.
who may yet
Don't
lose
get in your
their
head.
jobs in this tightening cycle?
Play the charts.
In the fight against inflation, as they try to translate what Fed policy means to them in this complicated economic landscape.
Yeah.
Thank you.
So I guess the first thing I would say to every household is that we know that inflation is too high. We understand how painful it is, particularly for people who are living paycheck to paycheck and spend most of that paycheck on necessities such as food and gas and heating their homes and clothing and things like
There it
that.
goes
We
to my
do
measure move
understand
again.
that-
Look at
that
this.
those
How many
people
measure moves do we
suffer
hit
the
now?
most. Middle class and
One,
better off
two,
people
three.
have some resources
the
where they
fourth
can
one in a
absorb these
row.
things, but many people don't have those resources. So
This is a clinic on how to
you know,
trade. Behind,
it is our job.
While he's talking, I'm giving a clinic on how to trade. If you can pick up, I mean, some people are picking it up. Some people probably just don't even know what's going on. But if you're paying attention, while this man is talking, I'm running a clinic in the background. It's insanity.
In all likelihood, some softening in labor market conditions. We need growth to slow to below potential growth. We don't want to.
The rate increase is 0.75, dude.
Bigger than it needs to be, but ultimately, if you think about the medium and longer term, price stability is the thing that makes the whole economy work. It's what can give us a strong labor market and wages that aren't being eaten up by high inflation. If you talk to people, again, people who are making wages, relatively low wages, they're the ones who are suffering the most from inflation. So it's all the more reason why we need to move on this. Thank you very much.
I agree too. 0.75 rate hike, everyone. All right, everyone, we did it. We did it. Congratulations. We did it. Now, he always has comments after this and all this other stuff, but that was it. I mean, that was it. That was awesome. We did it together. We got through it. And look, we just watched this on the 32nd. We watched Bitcoin just do damage. Shout out to anyone that watched this occur. We started with this flag here, which is an ascending triangle, and continued to make pennants all the way up. We just kept drawing the pennants as we went. This is a beautiful example of how to trade. Unreal. I just kept raising my stop loss throughout this. I eventually did get kicked out. The trade continued to go. I tend to sell a little early, but I tend to take my money and pay myself every day. So if you pay yourself every day, you might sell a little early, but every day you're going to get paid, and that's the key. Can we quickly see the Solana chart? Oh, come on. Now you're going to work me, right? Never watched you, brother, but glad I clicked on you. Let's eat. Shout out to Andrew Simone. Dude, Andrew, this is an amazing group. I come every single day. I have never taken a day off in 550 odd, some odd crazy days, 560 days, something like that. You're going to see me every day. I'm not going to take a day off. Something you've never seen in your life. You're going to get to know me. I'm going to get to know you, Andrew, and you're going to see that this is an anomaly. This channel is something you've never seen before. And, yeah, it's going to be a different ride for you for sure. Sitting at 22,750. As I blow your ears off, let me show out where, look at that, continuing to pump, 23K. Look at that, 23,000 now, hitting my next target to the upside. That's Parabolic City. The shorts just won't learn, baby. And let's do a bull dance for the bulls, baby. It feels good when you make it that much. No, wait. We're gonna come up with a new track. We gotta come up with a new track. Liquidated, don't get liquidated. Liquidated, don't get liquidated. Liquidated, don't get liquidated. So faded, don't get liquidated. Calling along. I got liquidated. Nah. But dang, man. Oh, there it goes. There's the final. Look, we haven't seen a candle that big in a long time. Engulfing. And I already sold, and that's how it happens on the 32nd. Woo! Look at that. That's crazy. That was amazing what we just did, though. I've never seen anything like that. I'm trying to go back in time. Yeah, look, I'm going to delete all my work. Look, this is crazy. Someone should take a picture of that, a screenshot. I'll have to go back in time. Oh, yeah, I can actually... I could have just graphed it and saved it. But that was crazy. I don't think I'm going to be on the 32nd. I don't need all this nonsense. Dude, we started down here. Look at all the patterns I made while we were just sitting here. Dude, I called every single move. Oh my gosh, that was crazy. For me, that was the most insane thing I've ever done trading. Like, that was insane. Only Fed meetings will teach you. And look at the freaking short squeezers. And we told you there was liquidity up here. We told you there was more liquidity up here. And look, now the liquidity, the low buys, they had to raise up to 22.8 now, 22.5. We got a lower high now, you see? And this is what happens, and this is how support and resistance changes. It's all about who wants to buy and sell, baby. Let's take a look at Bitcoin now, because I need to see what's going on. Look what happened on the chart. I mean, we talked about a falling wedge breaking to the upside. My goodness, boy, did it break to the upside, and it broke this resistance. This was our next really big resistance here. Wow, we saw that on the small time frames, but to see it on the big time frame, and again, the pinning, that's what happens when things get pinned. You must know how to play a short squeeze. If you don't know what a short squeeze is, then you wouldn't have figured this out. I'm telling you right now, this is advanced. Just learning how to trade is advanced. Just learning your Fibonacci's is advanced. Knowing all this stuff, doing what we did today, this is next level. Like, this means this is all you do every single day, day in and day out, and you just can't be beat. Like, most people got wrecked by this. We're not supposed to know how that was supposed to play out, but we nailed it. We were on point and we took them. Can we go for a walk now or no? Oh, we can? Awesome. I need to get outside. Like, it's too much screen today, too many charts. I need to hang out with my wife and kid and get a break from the charts, babe. I need a break, babe. I never get a break, baby. I never get a day off.
But you love it.
Can I get a day, baby? Can I get a day?
But you love it, and you do it to yourself.
I do it to myself. Glasses at 9. What a nice pump for Bitcoin, and we called it too. Join the trading group, everybody. If that's not an ad to jump on into the Discord for $99 a month, I don't know what is. I don't know why this number isn't flying up to $750 right now, because we nailed it, baby. We nailed it, and we made gains, baby, gains. Shout out to everyone in the 99. I love y'all. How y'all doing? Bang, 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 bang. Gains, baby, gains. Shout out to anyone that rocked with the lifer. Appreciate each and every one of you for being with me. My man. It's funny, man. I get that sometimes too. I can't send a super chat to certain people. I don't know why. We nailed it though. We nailed it. Dude, we hit my measured move and no one even sent a super chat in. Come on. Like, that's crazy. I called Bitcoin to the T during the live, hit all the measured moves. That's crazy. Whatever. I don't really need it. I get enough of I'm happy. I just, come on, man. If I saw that live, I would be like, yo, who is this? How are they doing this? And we did it. We started. I called a long right here yesterday on my live. I went long in front of everybody. I did it. Like, it's on record. I called bullish divergence right there on the 1 hour time frame, all the way up from the 7 minute. Swing down and swing down at the bottom of the chart, and you're at the bottom. Come on, man. I do this stuff live. Everyone else says they did it, and then you have to like look back on what they did. We do this live, like every single time we do it live, baby. So you have resistance here now at 22,750. That's clean. I'd like a candle to close above that, please. So what you do now is, look, the 15 minutes going to come after touch the 21-day moving average. So draw a flag on the 15. You're either going to make a flag or a falling wedge. One of these two patterns is going to fill out, and then you're going to touch the 21-day moving average. You may get a quick short here, or you may just go sideways. I wouldn't just attempt to short right now and become one of the dead soldiers that just got passed off. They may not be done. They may come for you again. You never know. So just because all the shorts got rocked, I wouldn't open up a short now. Wouldn't be the case for me. I'd watch a flag now. I'd take profits and I'd take a break now. Like, this is a good time to take profits and take a deep breath. You know what I'm saying? Like, we hit gains. So shout out to everyone that hit gains with me. Even though I did say to tread lightly, not to overtrade, to keep it easy. So I didn't want people opening up at tons of positions or, oh, I'm in a long, I'm going to short this. It's like, no. Take a deep breath, one step at a time. Take a deep breath, and we're going to trade the market the way the market is supposed to be traded. Route banged on them a little bit for some more gains. See, it was where the blue chips that pump. Little chips were like, whatever. Blue chips, look, we had it. Look, I gave this recently. ADS, remember? I put this in a bull flag, and I said this is likely to make a move. And look, it's about to hit my move here, up 40. Look at this, ADS. So if you were in the trading group, all right, type in ADS, ads. And you can see here, watching ads right here. Yesterday at 8:19 p.m., I got on the radar, likely to pump up 42%. It looked beautiful in a flag. It was pushing up to the upside. And there's your before, right? Wow, that's weird. I must have moved that. So there's your before. There's your before. There's your after. Look, no stop loss got hit in the making of this trade. Had you been in the trading group, you would have banged on ads. And it may not be done yet either. But I mean, a candle like that is when I definitely get out. 33%, of course, isn't it? Isn't it so beautiful? 33%, 0.64 for ads. If you hit the wick, 37% gains. So amazing. What I do is I send this to my team, and then they can look up ads here on Discord, get the before and after, and bang it out. Shout out to everybody here on the live. Thank you for jumping on in. I appreciate each and every one of you. And we do use Slack, the Slack app, unbelievable. Shout out to everybody here on the live. Thank you for jumping on in. I appreciate each and every one of you. So look, we have one of the bigger gainers, the top gainers in the top 10 this afternoon, if you're in the trading group. And my goal is to hit gains in the top 10. And there it is right there. I even talked about Plager. It's up a little bit too from entry on the 200-day. I talked about VEGA. VEGA's up a little bit. It was playing games, bounced off near the 200. I didn't talk about Jen's Ethereum Classic, though. I was all over it. And it went past my measured move for 24, even further. It went up 31% gains, Ethereum Classic. So this went up even more. I made the call right there at the bottom. No stop loss got hit in the making of this trade. We're on fire, man. We are on fire, and we deserve to be on fire. We don't take days off. We don't take moments off. I've been live streaming since 10 this morning, putting in another 2 hours, and I love every single second of it because I love my life, baby! Sorry. But I'm hyped right now. I'm on a hype train, and I'm feeling good. You should be feeling good, too, because you should be making gains with the lifers. Bang, 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 bang. Like, it doesn't stop. And, you know, the market didn't look too good. Things looked tight. I got out of my head, I pushed forward, and I continued to stay with my trading style. Your mind will play tricks with you. Your emotions will play tricks with you. But you will keep pushing. You will keep pushing. All legs, no torso throws the $100 super chat. But it wouldn't go through. I feel you. Someone did send in the $50 super chat now, and I didn't see it. Funny, because I'm whining like a baby. I'm like, meh, meh. But I mean, come on now. Like, we banged on him. You know, look at this. Well-deserved life for my man. I had to cry for it. Oh, my God. I'm such a baby. Such a baby. Super chat Shib. So look, if we could stay above the zone now, you can see we broke above the resistance. We need it. We want the bounce off this area here. I'd love to see a bounce off this to the upside. I know I'm using the 30-second, but it's interesting. I mean, the 30-second may be the first chart to show me the bounce here. Looking for a bounce on the 30-second to the upside. Could make a double top, or we're going to push through the resistance. So, hey, man, I never used the 30-second, but it got us through that entire meeting. I may use it more than I ever have before. Insanity. Ethereum Classic for massive gains, baby. And making gains together feels amazing. Nah, all legs, no torso. Look, she sent in a $100 super chat. So let's all look at it. That came in. It's a real super chat. No other YouTuber trader calls it accurate as Sam or puts himself out there by doing live trades and hitting it every time. You're insane if you don't join this community. Thank you for proving me right and making every cent worth it. Hey, I knew you were right when you joined the 99. Come on, girl. You know you have the intuition. Come on, you know you have stronger intuition than us. The women in the group are what keeps our group together. It's love learning, and the ladies in the group, really, we have a strong group. We have a community. We have masculine energy, feminine energy, young energy, old energy, vibrant energy. And the idea is every single one of us wants to live our life to the fullest. Don't make me cry, but every single lifer wants to live their life to the fullest. Every single lifer in that group wants the best for every single lifer in that group. And that's what makes it amazing. And that's why we hit the gains. And that's why we dominate. And that's why we're here, baby. And nobody can touch us because we vibrate so high. And we use love as the strongest frequency. And you can't stop the love, baby. You just can't stop the love. I'm drunk on gains. I'm drunk on vibration. I'm drunk on energy. I love each and every one of you for being here. Shout out to Alfonso Lozano. I'll see you in the 99, man. Another $50 super chat coming on in. Respect, baby. Respect. I see you. I see you. I see you. And I don't put BS trades out there. Okay? High vibration, high frequency. Shout out to, and if you missed the trades today, do not worry. Do not worry. It's more about Bitcoin breaking above resistance, getting some moves. There's going to be 100 other trades just like today. Do not worry. Do not worry. But we banged on them. We banged on them. Highest vibes in the game. Shout out to Higher Frequency. You've been here since day one watching the vibes grow, baby. Since day one watching the vibes grow. We were never short on vibes. I love you, Lifer. Thank you so much. I love you too, bro. Thanks to each and every one of you for making this amazing. I feel like we accomplished something today. Like we battled the market makers and we won. You know? I went through a tough time. I couldn't sleep last night. I'll be honest with everybody. I had a tough time sleeping last night. I was rolling. What am I going to do? The Fed meeting? What are they going to do? There was an icky feeling. Cryptolifer for life, baby. When Lifer will have 15,000 watching, Bitcoin will be at 121,000. Hope soon. It will be sooner than we realize, baby. It will be sooner than we realize. And not every coin hit. Look at this one. JSMY. Oh, that's the short, yeah. Just love your greetings from the highway. Huge profits. ENG. 200% gain. Since I am a member, I gained. Lifer to the top. Shout out to Amar and Habets, man, for the $9.99. Thank you so much. Any books you would recommend for a lifer to read? Yeah, there's 3 awesome books. Number 1 is Think and Grow Rich. So look, we took it ZK Tubes. They took it down, and then it ripped right up with Bitcoin. Think and Grow Rich is a number 1 prerequisite. All right? Then The Slight Edge is another book that's going to really help you. The Warrior of the Light by Paulo Coelho. I love that book. All right. Those are 3 books to get you started. That'll change your life and get you going. Shout out to everybody here on the live. Thank you for jumping on in and appreciate each and every one of you for sharing your most precious asset with me, and that is your time. We hit the Bitcoin bang out. It's kind of like a fallout now. You're just like sitting there like, whoa. Now we're watching the 30 minutes stay above the resistance at 22,750, 22,800. Damn, who needs Michael Pa on a day like today? Shout out to everybody here on the live. Appreciate each and every one of you. Warrior of the Light, help me quit alcohol. There you go, brother. Next Bull Run, you will average about 10K viewers for sure, I reckon. Hey, anything is possible, man. Maybe 50K. Bro, Sam, you're the man. I'm glad you got so many views. Bro, I hope they keep coming back. Cryptolifer gang, man. Hell yeah. The Science of Self-Realization. Good guide. I can't believe the vibes that I get every single time I enter the live stream. You're the father that my life didn't give me. Thank you very much, Sam. Anytime, my friend. All right. All right, everyone. I got to go with my wife and take my kids out. Look at the views at 2777. We talk about the 777s, and the numbers are always appearing. 2777. Amazing. But watch the live stream from earlier. Watch the live stream from now. See the magic that happened. Understand why people love the trading group. Look at the gains we made. And everybody, I'm going to see you tomorrow on the next live stream. I'm going to keep my next update to the lifers. We're going to watch this area right here. I want to see a bounce back above this channel. I just don't want to see an M pattern get made at the resistance at 23,092. All right? I'd like to see a nice consolidative move or some sideways action here just to give us that breathing room above this high volume node to say that 22,008 is going to be a nice bottom support area. And I'll update my group in an hour from now. And 2 hours at the very most, and we'll go from there. Shout out to each and every one of you for jumping on into the live. Shout out to everyone that chatted. I greatly appreciate it. You have only started. I have only started. If you are here, good things are coming your way. Shout out to Zen Riot. I love you, man. Thank you, Sam. Best trading group ever. Shout out to everybody here on the live. Thank you so much for being here. Today was a milestone. We did something amazing today, babe. We really did. And join the trading group. I'm telling you right now, it's so easy. There's a link in the description below. Jump on it. It will change your life. Hang out with me for a month at least. Give me 1 month of your time. Let me prove to you 1 month of your time is worth it. After that, you can go your own way. Just give me 1 month of your time. Let me do my best work in 1 month. All right, everyone. I love you all. If you want to get into the trading group, the message is pinned. Have a wonderful night. Be safe. And I'll see you on the next live stream. Crypto is life. Have a good one, everybody. Thank you so much. Words can't express my gratitude. Thank you for the super chats. Thank you for the love. And thank you for each and every one of you coming on in. Be safe. Tonight, we have a weekly screen share together from 6:45 to 8:15. If you're in the trading group, we have a private screen share together tonight. What a better night than tonight. So I can't wait to see you all as we go over what happened. We talk about where the possible pullbacks are and where we stand. I think it's a great night to have a private screen share. So tonight is the private screen share. Link will be posted in a little while. If you want that, you should join the group. You'll be with us privately tonight, and you're going to see some insight. So I'll see you all tonight. Be safe. Crypto is life. Thank you so much. I'm out.